Hey guys, what's going on? And I hope you had a very happy and great Memorial Day. If you are actively in service, if you are off service, we thank you for your service. We thank you from the bottom of my heart if you are supporting and watching this channel. And yeah, we appreciate your service and for everything you did. This is really important for us to acknowledge and celebrate people who, pay the high sacrifice for us to be where we are today as a nation. Now, that being said, as every Sunday, we make a preview video and look at what's going to be the market mover, some of these indicators that are going to move the market in one way or another direction. And by the look at what I'm seeing right now at the time I'm recording this video, things look pretty good. Things look pretty good. But will it hold for the coming week? Because we have another array of indicators that are directly related to measuring inflation. And we all know this is a very sensitive subject right now for the market, But if things go according to the plan, then definitely the market can continue to rally even stronger than the past week. So before we jump into the market indicators, the economic indicators, let's look first, quick glance at how the market is already operating now in the future session. Future session is when the market is not open, but some market participants have the ability to start, placing orders, start placing trades, and that move the market. So it gives you a clear, a little bit of an indication on what to expect when the trading session opens up the next day. So as of now, the Nasdaq is already flirting with 1%, up more than 100 points. Usually when this happens, we might expect maybe a 2%, 2.5%, 3% if things go according to the plan in the next following trading session. Now the S&P, not that, still flat, and Dow Jones still flat. Now oil is also gaining, already up more than 2.2%. If this stays the course, then expect oil, stocks to also rally tomorrow. Now, what we saw in the past, 6 to 8 weeks now, every time crypto is up, the market tend to be up. The reverse used to be true up to maybe Friday, Thursday, because the market were way up there and crypto was cratering. So the fact that we have Bitcoin back above $31,000, Ethereum flirting with the $2,000, so we have almost 2%, on Ethereum, and Bitcoin more than 1%. So usually when we see this, it means the market may be, bracing for another huge rally. And let's look at what may be the stuff, that will be announced starting tomorrow, Tuesday, because today was, public holiday, market were closed, at least in the US, and we can see. So another thing, usually when you look at how the other marketplaces around the globe, traded today when the US place were closed, it can also give you an indication. So Europe was green across the board, and Asia was also very green. So given this, I would expect the US market to also follow suit. Now, going into what may be the indicators causing the market to rally tomorrow. First off, I don't know if you guys heard it, but Shanghai, which is a major economic platform when it comes to factories in China, but also businesses, has started easing up on restrictions around COVID. They were already kind of smoothing that a little bit, just a notch last week. And this week, it seems as if things are going back to a sense of normalcy. That is good because factories will be reopening, businesses will be reopening. So the sentiment on the consumer will be also improving. And it means that we don't have to be concerned again as much when it comes to supply chain issues worsening, because if that continues to worsen, then inflation is not going to improve. And we want inflation to improve for the market to calm down so that we can start making money. All right, so on the economic indicators front, we have earnings coming up, and we have Gamestop, one of our favorites, Broadcom, Lululemon, among others, Chewy, Salesforce, those. And then we have National Home Price Index expected on Tuesday, showing year-over-year appreciation in housing prices. And we have key updates coming onto the labor market now. This is what we need to pay attention to. We have the JOLTS openings. This is, all the openings that are out there in terms of the job market. Plus, we have the hires, the separations, the ADP private payrolls. This is really important because it gives you the private sector, whether it added or not jobs to the marketplace. And then we have the non-farm payrolls as well. So these are kind of the main concern. We also have the PMI, the PMI, which is kind of like the CPI, but for producers, companies out there, factories out there producing goods and services, because it's one thing for the consumer to feel inflation, but if the producer, those companies, those businesses are also facing inflation, high chances are they're going to pass that inflation, those price hike into the customers, still worsening inflation because it's going to be a vicious circle, and we don't want that to happen. So if we have a clear indication that the PMI is declining and following the CPI declining, even if it's not a strong decline, we only need to have a sense of peak around there to give the market another momentum to go back to the upward direction. So June 1st, we have Chewy, Gamestop, PVH reporting earnings. We have the PMI that I was just talking about. We have the JOLTS openings for the month of April. We have the Fed beige book. This is not really, sometimes there might be some stuff there, but not really a market mover as much as these others. And then we have, the consumer confidence. Very important as well. Plus Thursday, the ADI private sector payrolls. We talked about the factory order. We talked about this. And then Friday, we end up with non-farm payrolls report, which is really important as well. The PMI composite for the S&P Global and non-manufacturing PMI. So lots of indicators that are directly related to inflation, even those around the market, because everything now is everything the market looks at now is about, okay, how inflation is doing, what inflation is looking like, what is the direction inflation is taking. So anything regarding consumer confidence, producer confidence, CPI, PMI, but also the job numbers, because if the job market, according to these indicators, is still very hot, still very strong, then it has a direct impact into what the Federal Reserve is going to do as a policy in order to fight inflation in response to those prices hiking. So if all of these indicators are matching the expectations, I will expect the market to continue to rally going into this week. But as we get, consumer confidence, the PMI, so Wednesday, then if things are good, I think we can get another weekly green for the markets this coming week. So things to keep in mind.